26 points left. So, this is what we've been talking about, that there is going to be a back and forth. I mean, no reason to expect it to be a one-way kind of a move on the downside as well, as we've been saying. So you'll get that. I mean, you get into a point after a significant waterfall kind of a decline where there is a bit of a pull and push. It's no longer sharp in that sense, and I think we've entered that phase. 22 higher, 17,533 is where we are at on the index. Reliance is adding the most on the upside, and a bunch of names on the other side as well. Now, sugar companies are on our radar on the back of global prices soaring to near 6-year highs. The Indian government says production this season may decline by 7% to around 34 million tons. Factors like unseasonal rains and an early onset of the summer season has also led to the government capping sugar exports at 6 million tons. Let's get the perspective going. We've got the management of Triveni Engineering joining in to tell us more. Tarun Sawhney is Vice Chairman and Managing Director. Tarun, great to have you with us here on the program. Thanks very much. You, of course, have got a sort of a tender buyback also on. I just wanted to understand from you first up the onset of the early summer, which everyone is talking about, and how that is likely, in your assessment, to impact the crop yields, etc. Go on.
Right. Good morning. Good morning. Yes, and I think you've highlighted the present position quite well. The onset of the summer is not comparable to the onset of the summer last year. So right now we are seeing higher temperatures on average compared to the past few years, but nowhere near as high as they were last year. And therefore what we're seeing actually is a return to higher levels of maturity. The impact on yields, present yields, is negligible, but there is actually a positive impact in terms of the recoveries, with the great differences between nighttime and daytime temperatures. And so if this pattern were to continue, and we won't see very high temperatures in the month of March, I think that the remainder of the sugar season, from a recovery perspective, which has a direct impact on cost of production, will be quite positive.
Okay. Tarun, hi, good morning, and thanks for joining in. I think ethanol production is the big focus area for the government, as well as for your own company as well too. So let's talk about that. The industry is expecting the highest ever diversion to ethanol this year. At Triveni, how much sugar are you planning to divert to ethanol?
Excellent question. So, I think the expectation of the industry is to divert 4.5 million tons of sugar towards the ethanol program this year. And we're going to try and reach an overall blending of 12% ethanol. Now, if I were to give you a comparable for Triveni, our revenues from our ethanol business in the previous fiscal year was just a shade above 1,000 crores. And we're anticipating that will grow by about 35 to 40% as well. In terms of our diversion towards of sugar towards ethanol, we're looking at a substantial increase. We're going to be diverting almost 12% of our sugar towards ethanol.
So you're saying your revenues are currently 1,000 crores in the ethanol business. It will grow about 35 to 40%, and you will divert 12% of your sugar to ethanol. Got that. But what would this mean in terms of realizations? What is the realization currently, and how much do you think you can take it up to?
So it's a good question. The realizations of ethanol are set by the government. So there's no real opportunity to increase the realization from ethanol. However, I would like to mention that there was a handsome increase that was offered by the government of India for ethanol tenders for this supply year. I do expect that the government will reconsider a further interim increase during this year. This happened last year. I see no reason why the government will not look at it favorably again this year. So we could, at least at Triveni, we're anticipating that the government may consider a small increase, thereby signaling to the market that we want more investments coming in from the sugar industry towards the ethanol blending program.
Okay, from your end, you said about a 35 to 40% rise in ethanol revenue. So if we're looking from 1,000 crores to about 1,400 crores, what would this mean in terms of raising your capacity? I mean, how much would you be pumping in terms of capex? Last time, I remember you told us you're going to use a lot of your internal accruals, for raising production or switching production.
Correct.
How much is the cash on the books currently? Will you need to take on any debt?
Let me answer both parts of your question. The first part, of course, is that when we spoke last, we had expanded our capacities up to 660 kiloliters per day. As we stand today, the board has approved a further 460 crore capex for two plants of 225 KLPD each, which will raise the capacities of the company to 1110 KLPD from its present 660 kiloliters per day. That's a pretty substantial rise, and we anticipate that this will really come in about a year's time from today. My anticipation, of course, is that that Triveni will continue to consider expansion in this area, of course, provided we see a good uptick in terms of pricing support.
All right. Hi, Tarun. Morning. So, at peak levels then, given that you have your capacity going up by around 80% or thereabouts, by 2025, what kind of revenue number will you look at from this ethanol business?
So we will see more than doubling of revenues from last year's numbers when we have a steady run rate. We produced about, this year, we're going to target producing about 18 crore liters. In a steady state, after the 1110 KLPD is operational, that will increase to about 31 crore liters. So a pretty healthy rise in terms of not just production, but also revenues.
FY25, it will be 31 crore liters, right?
I'm sorry, you cut out there.
FY25.
31 crore liters will be the steady state. That is correct.
That's it.
That is correct.
In FY25. Just out of curiosity, Tarun, people want share market, from a share market perspective, they would want you to unlock some value. Do you think it's feasible if you had to demerge the entities that you have? You have a little bit of power, you have the distillery, you have the sugar business, or you believe you'd like to keep it all together?
Right. Again, I get asked this question frequently. The board has not contemplated a split of the engineering businesses. We have a power transmission business, and we also have a water and wastewater business within the company that account for approximately 10% of our revenues. We've not contemplated any split. Those are still smaller businesses. I'm sure as they grow, because they are doing well, we have a 1,766 crore order booking in those businesses. And as those deliveries happen, as the business prospects further strengthen, nothing is off the table, of course.
Okay, nothing is off the table. But you spoke about the power transmission business. Just one last question on that. I think you have an order book of around 260 odd crores there. Is there any updated number that you want to share with us? And also, what are we looking at in terms of execution timelines?
So our execution timelines for a large portion of that order revenue is over a year. I would say about 40% of that order book has an execution of 6 months. The rest is beyond a year. We have a fairly short order booking cycle on our classical products. I don't really have an update to give you at this particular point in time. I'd be happy to share that with you after our year-end results.
Right. Thanks very much. Appreciate you joining in, and it's always a pleasure speaking to you, Tarun. Thanks indeed. Well, we'll